Welcome to the Grab the Map podcast, where we don't just look at it, we grab the map. I'm your host, Johnoson Crutchfield, and today I've got a special guest for you. Justin Oldham is in the room, and we are excited about having the conversation. I think a lot of people are going to be very impressed by this show. I know I am. You don't meet too many people that are on the trajectory he is. Hey, Justin, are you there?
I am.
Good to have you this morning. Actually, if you're listening to this, I don't know what time you are, but we're recording it in the morning. Grace us here this morning. Justin, are you in Tulsa? Tell us a little bit about you and your business. And I think you told me this might be your first podcast recording ever. So
Yeah.
I'm sure everybody can judge for themselves.
Yes. First, I'm from Tulsa, Oklahoma. Justin Oldham business. We Spark Homes. We do mostly rentals in the space. We do it's a pretty wide range, anywhere from 60 to 100 homes a year. I am married to my beautiful wife, Michelle. Have 4 kiddos. Just had my wife just had our fourth a month ago. So just getting back to it. It's been a little slow period, but now back in full swing of things. It's buying season. And that's about it. And first podcast. I was actually supposed to have a podcast. My first podcast was supposed to be Wednesday with one of my best friends, but the studio for some reason had problems. So this is my first podcast. I was hoping Wednesday I'd be a little warmed up.
Yeah, I'm glad to be able to do this with you. I met you first on social media. So I've been following you for a while as you make your posts about your business. And I've always found it fascinating that you post, hey, I'm buying like 12 houses this month. Send me something. And does that work? Do you really buy 12 houses in a month?
Yeah, we have the capability to buy much more than 12 houses. It's a number that people understand. If you throw 20 out, people are like, whoa, like there's no way, you seem fake. But yeah, we have the capability to buy much more than 12 houses a month. It's more trying to stay on top, being your industry leader here in Tulsa, Oklahoma, in single family 1 to 4 unit dwelling space. But yeah, we've had many months where we can buy 10 to 12. We have bought contracted 10 to 12. We've closed 10 to 12. Right now, I think this past month we closed, 8 contracts, but of 8, one of those had 8 doors. Yeah, it's definitely possible. And I thought the first time we met was at the event in Peoria. I didn't know I'm really bad about Facebook. I just know the one thing that changed a lot of my business was just making those simple posts. And when I make those posts, you wouldn't believe the outcome of people sending you a deal. Is it? Or sending you a home to look at in order to make an offer on that, even if it doesn't align with their price. As long as I still able to get in there and make an offer on the property, it just opens you up to a lot more exposure and a lot more people will take you seriously.
Yeah, when you make offers.
Yeah.
Yeah. In person, we met in Peoria. I heard you say, I think he might have asked, this was Matt Larson's, Matt Larson, awesome guy, shares a lot of valuable information. But I think he might have asked who in here has done 100 deals or something like that. And so I was looking around the room to see whose hands go up because I want to connect with those people after a break or something like that. And so you were one of those people whose hands shot up. And then once we connected by phone, I got on social media, realized you were on there and that we had already had some messenger conversations because you got a whole rounded real estate business, right? You're not just flipping, you're doing rentals, you're doing some lending, right? You've got a lot of things that you do, right? So maybe talk a little bit about all of the stuff that you do.
So we have other partners. So basically the parent company is Spark Equity Group in total. And amongst that, there are different divisions within Spark Equity Group. But yes, as in a whole, Spark Equity Group does lending, commercial, industrial, multifamily, single family. Single family is like the bread and butter of the business. That's where we started. And Will and Sam, I think you met Sam when he was at the event. You didn't get to meet Will. But Will and Sam are the ones that actually formed Spark Equity Group, I think 2 years previous before I was there. So my main goal and my only objective within is just homes, Spark Homes. So that's all my full focus. If you've ever read the book, One Thing, and that's my one focus is residential at this point. That is not to say that we don't mix in like some land and stuff in there. But I guess a little backstory before I even started, partnered with them, we did multifamily. So I did multifamily for about a year and got about 6 or 7 under contracts. All of them ended up busting. And then we ended up fully focusing on single family. So that's in a whole. Spark Equity Group was truly founded by Will and Sam, my 2 other partners. And then I was brought on a year or 2 after the founding of Spark Equity Group. And then just full force, single family, 1 to 4 unit dwellings from there.
Yeah. So we're going to back up a little bit. For those people listening, it may get a little interesting because this is just a conversation between Justin and I. We've been trying to catch up, and I'm very interested in somebody doing 60 to 100 deals a year, what that actually looks like personally. So it may seem that we get a little detailed here, but hopefully that helps somebody. Before that, though, Justin, why don't you just tell people a little bit about your experience prior to Spark Equity Group? What were you doing before? What prepared you to lead Spark Homes? What did life look like before Spark Homes?
Sure. So before Spark Homes, I was an aircraft mechanic for 10 years. So straight out of high school, I graduated in 2009 and then worked as an aircraft mechanic for 10 years. And I think towards the last 2 years of my career as an aircraft mechanic, my wife and I, we got married, had a kid, looked at our life, put it in. I'm a spreadsheet Excel kind of guy. So I put it on an Excel sheet, what our life looks like. And we got our 2 to 3 vacations a year. We made a decent income, but we were working on someone else's time. And my biggest goal was to get freedom and flexibility of my time, because my biggest reason for leaving my W-2 was to be a dad. And my why has been early identified of why I'm doing what I'm doing and for the constant push. So the last 2 years as an aircraft mechanic, I met up with another investor, and I had a construction background. I've had a couple businesses alongside my aircraft business, just mowing businesses, some side construction businesses. And I realized really early on that I had a job and I created 2 more jobs. I couldn't free up any time. So met with this investor. He asked me if I could like GC some of his projects. He taught me about wholesaling. He taught me how to price projects. And I traded basically my time to GC his projects. And he taught me how to underwrite deals, how to price them, how to put a deal together. And that just intrigued me. I love numbers. Numbers speak more to me than pictures or anything like that, or any emotion. I don't really get emotionally involved on single family or houses in general. So I learned that for 2 years. And I think there was a kind of a click in my brain that I was like, oh, so ended up leaving my job, working for him, I think for 3 months, like full time. And I was renovating a 20-unit apartment complex in like a really rough part of town. And it dawned on me one day, I was like, man, why don't I just take the risk and do it all myself? So made a Facebook post, said, hey, who wants to like JV on a flip? Found my best friend now and business partner, Silas Brooks. We were supposed to do a podcast Wednesday, and we met up on Facebook. I would not suggest anybody meet up that way to find your partner. It was just by the grace of God that we aligned, and we bought a flip house. I had exposure to contracting understanding renovations. I had a bunch of exposure to hard money lenders, understood all the numbers. I had 2 years of coaching and just put it together. And Silas was actually a real estate agent for a couple of years, I think 2 or 3 years. And this was his first flip as well. So we partnered up, flipped a house. In that time, we really found out who we were. And we were like, oh, we're done with this. We can't stand each other. And we actually ended up buying, I think, 2 or 3 more houses together and just kept rolling it. And then we did a bunch of flips together, made some good money, best friends. And then we went our different ways, and then still great friends, best friends to this day. And then met up with Will and Sam at that point. I knew Will previously. We were in like a one-on-one mastermind group together, just keeping each other accountable and stuff. So that is the long story of how I came to be. So I've only been in real estate on my own. I think this is my fourth year, I believe.
Third and fourth year and doing 60 to 100 homes a year. I think depending on which range you're in, like that's a lot or it's not a lot. But to me, it's a lot. Let's get into it a little bit. First of all, like, how do you get it in your mind that you want to do that many a year? Is there an income target, or is there just scaling? Where does the number come from where you're not just doing? I think most people might be happy if they do 5 homes a year, right?
Yeah. Yeah. So we do a annual end of the year goal targeting. There is an income number or goal. And all of us agree that if you're not aiming at something, you're never going to hit it or even come close. So obviously in single family, you have 2 options, in my opinion. It's either be a volume person or be a single operator, and you're doing those 5 flips. We have a full team, so we're doing a full volume. We're taking less profits to do more deals. A single operator may make 40 to 50,000 on a single flip, which we make some of those every once in a while. Those are great. Our standard profit margins are probably somewhere in the 20 to 30,000. Also having a full team, paying salaries, making sure people are fed. So yeah, we do make sure we hit a quote unquote annual revenue target. And also a number, just putting a number on the wall is also just another target, which we tend to always either come near or close. In the last 3 years, I think it was 83, 120, 75. And this year, I think we're closing in on, so far, just this year, I think we're at either 48 or 52 on this year. So yeah, it's setting targets, goals, quarterly goals. And we actually just brought on traction to our team. Yeah. So we can actually get more dialed in right now.
Awesome. Familiar with traction. I think that's where a good place to start a conversation around your team, what it looks like. I know some people are probably seeing the title, like how to manage your money in real estate. We're getting there. We're pushing that direction. So can you talk to me a little bit more about your team? What does that look like if you're going to, let's say, track towards 80 homes or 100 homes in a year? What are the different components of your team, like those positions?
Yeah. So I guess we'll just start with mine. Me, obviously, just overview, oversight, making sure everybody's on track, making sure I'm giving full support to my team. If they're having any issues or problems, leading them, guiding them. I do want to state the only way to do that number of volume is not a single person. It's no way possible. It's the right people in the right chairs and all have the same trajectory and same goal and want to build and want to be somewhere different in the next year. So every single person on my team are drivers, pushers. They're pushing the status quo. They're not settling. So I just want to say the only reason I am able to do this, or my partners, we're all partners in this, is because of my team. Everybody is amazing. So breaking it down from there on my acquisition side, I have one single like acquisitions manager, which manages all leads. I still do some lead generation. He handles all leads. So any lead funnels that we have built out, we do everything: mail campaigns, cold calling, PPC. We've tried PPL. What else? Referrals,
You name it.
wholesalers. Yeah.
Do it all.
We do. We try to do it all. He handles all leads. The one thing that I do to assist his side is I fully underwrite every property we buy, because 99% of the time we keep that property. We don't tend to flip very much. We try to keep everything. And then I have two GCs, which our head GC, Devin, he actually ended up starting Spark Construction. So he GCs other investors' projects. Zach, my main guy, he filled some big shoes, took over as head GC of Spark Homes. We hired a few other individuals, just didn't align, didn't have the same trajectory, and actually ended up hiring his brother, Tyler. And now he's full time with us, just past his 90-day or maybe 4 months now. And they're doing amazing. Zach's fully training him, equipping him. Before this, what's crazy, when you say it's crazy that you can do 60 to 100 deals a year, I think what's insane is my GC, Zach and Devin and Tyler, can GC 60 to 100 deals a year, like 10 to 15 contractors on point, keeping timelines, budgets on 60 to 100 homes. Like, I'll be honest, like I have no clue how they do it, but they are freaking awesome. I'll say that. And then, okay, so those are my GCs. And then on my back end, my disposition, I have a few sales agents, a few realtors that we work with if we do sell. And then, so basically they lease up. And then I have a full property manager that we just brought in house. We were using another company, but we were not, quote unquote, most people will hear this, not excited with the outcome or the control of the asset, keeping it in a good working order, making tenants happy. Because if you're not keeping tenants happy, you're obviously not getting paid. You're going through a lot of problems. So we brought that in-house this year, currently building that out, and it is going fantastic. Obviously working through the bugs of that. Also on my acquisition side, I have cold callers that I work with that we consider as our partners as well, that are dialing and making deals, and they have creative structures with us that make it a win for them. So that's the full lean team. Oh, one last person, my accounting bookkeeper. She's full time with us. We brought her in full time. Our company could not run without her. She keeps all the invoicing, all money tracking, reconciling accounts at the end of the month, making sure we're on point, profits are coming in, people are getting paid, contractors are getting paid, GCs are getting paid, making sure dollars are being spent where they're spent, and making sure that accounts are protected and people obviously aren't stealing from the company or just making unnecessary purchases. So that's the full team.
Yeah. I heard you got acquisitions manager, you've got a couple of different GCs, somebody in charge of construction, somebody else in charge of Spark Homes. So you've got a division that's doing rehabs and I guess managing construction for other investors as well.
So that was my head GC, Devin, and he actually ended up, yes, we do have another division. It's Spark Construction now, and that he heads up, and that's his own thing. He heads that up for other investors.
And then on the disposition side, you've got partnerships with agents that are helping you do lease ups and sales. I imagine your property manager now will be able to help with that too.
Yeah.
So are you dispoing any of your leads before you actually flip them, or what's your main exit strategy right now? What are your exit strategies? Because you've got a lead pipeline, right? You're doing mail, cold calling, PPC, PPL, referrals. I'm taking notes for y'all, so y'all make sure y'all take these notes back. You're doing everything to get leads in the door. You've even got an acquisition manager to manage that process. What's your main What's your main exit strategy?
So most of the time, our main exit strategy is to keep it, rent it long term, cash flow, and have some equity left in the home. Right now, underwriting, since the economy is where it's at, we're definitely tightening up. So our main goal and objective is always to first look at keeping. Does it make sense? And then second, and then we'll sprinkle in some, if it makes sense, we'll do some lease options, owner finance, rent to own. We'll try to keep them that way if it doesn't work out as the standard rental. And then obviously, if it's what I like to call as a cash grab, if we find a home run deal and we know there's enough meat on the bone, for example, we bought a house the other day in cash for, I think like 30 grand is worth 200 grand in ARV. I think we spent like 3,000 on the renovation, which was just literally, it was a hoarder house. So we cleaned it out and then we ended up selling it for 110. We still left meat on the bone for another investor to come in there, flip it and keep it, or whatever their end goal was for it. So we'll do some wholesale. We're not a wholesaling company. We will wholesale a few that are not within our specific buy criteria. So if it's outside our buying area, most likely we'll try to monetize any lead. That's actually a new thing we've done this year is any lead that comes into the door, we're trying to monetize at this point just for marketing dollar costs if it offsets our marketing. But our main objective is to keep it. We're bringing on some flips now, more cash. We're stacking cash because I think I texted you earlier this week about a potential downturn in the market and just being ready when that comes. So we're just stacking some cash. If that time were to arrive or that opportunity to arrive, we'll be able to capitalize on that downturn.
You're getting ready for the need for cash and be able to buy some stuff cheap.
Yep, I agree.
For closure start, we're going to need cash, right?
Yep.
All right. So this is great. So much value you provided already. If somebody was trying to build out an infrastructure to flip this number of homes, they'd have an idea of what that looks like. One of the things I thought about as you were talking about your exit strategies, is that you that's deciding on the exit strategy? Is that your disposition agents? Who are you leveraging to decide lease option, rent to own, wholesale, flip? Sounds like you're doing a lot of that.
So the final underwriting is always me. I always make sure and it's more of a control thing. I've actually looked into possibly like someone doing the last final decision, but I'm just not comfortable with it because we keep everything. And it's really not a big task to underwrite at this point. I can underwrite a single family home within, 5 minutes, but I do the final goal I set the final end goal of that property, whether it's a flip or a rental. And it's just based off variables within the neighborhood. Is it selling better? Do we have a big spread? Where's the accounts at? Where do we want to be at? Do we want to keep this one as a good area? Do we have a big equity spread? Is it cash flowing? I'll be honest, if it's not cash flowing on day one, we're not buying it as a rental. There's this new wave, which is weird to me, that people are buying stuff that has these great equity positions, but it might be losing money every month. I just don't agree with that, and I never will. It's a weird strategy. I don't play that strategy. And I think any company at our size can't play that strategy.
So, we run similar operations. I think that I'm wearing a lot of the hats that you got team members for. Somewhere around 500 rentals, I ran into the challenge probably not having the right people in the right seats to facilitate it all, and started like having severe cash flow crunches, right? It's fun. You're buying like crazy and refining like crazy, and you're seeing big checks come from forced appreciation and refinances. When the rates changed, the lending sources got funky, got nervous. And so then we started seeing, okay, are we really cash flowing on these rentals? Are they really going positive? What is the vacancy and what is the tenants that aren't paying, whatever the fancy term for that is, what's that? Like, what does that really look like? And so we went from having these swings of 100K, 150K positive months. Okay, what do you do when you're negative 75K? What do you do when you're negative 50K? So I want to pivot to something that I think a lot of investors struggle with. Sounds like you got a really good handle on this. And that's what impressed me when I met you. So I'm looking forward to this conversation. A lot of investors struggle with cash flow management. How do I actually operate a business, right? It's fun to borrow money. It's fun to do renovations and get draws and all of that. But at the end of the day, I want to be cash flow positive every month. And I want to be liquid enough to continue to expand my business. And I think a lot of people struggle with that. So can you talk to me a little about just all of the overhead you have? Are you paying for that with your rental properties, or how is that structured in your mind?
Yeah. So as growing, obviously cash flow is supporting overhead most of the time. As you're pushing and you're growing, your cash flow is obviously being ate up by your overhead. And that's the part of business I didn't understand when I first started. You don't get to cut yourself a check until the business is growing and it's able to sustain itself. Cash flow definitely helps out on overhead. I will say our overhead with the team I explained, we're very dialed in. We're a very lean team. As you heard, I think we have eight or nine individuals, and we make sure every dollar is spent in the right place. We're obviously looking at our marketing costs first and foremost, because those are always the most expensive, to keep those leads pouring in at a good rate or good per dollar. I'm making sure, I guess I forgot to mention, I have a online manager. So he manages my full online presence. I forgot to mention him. He's one of my secret weapons, but we've controlled how much we spend. And to be honest, our overhead is not as much as you think with the amount of deals that we do. And the biggest thing, one of my biggest things is you don't just keep throwing money at the wall to see if something works. You have to first start and do something, figure it out, and then look at the numbers and the data behind it. What's your dollar per opportunity, dollar per contract, dollar per closed deal, and are you actually making money? That's a big deal. So tracking expenses, we do that monthly. At the end of the month, we reconcile accounts to make sure everything's spent in the right place. But yeah, cash flow is obviously not lining our pockets. It's making the business grow. And at some point, yes, you'll get to realize that profit in business. But at the point that we grow, we don't look at that as like income we're bringing in for ourselves and just yet. So that was one of the hard business lessons I had to learn, was that supporting the business as the growth continues. Once growth like stops or sustains or levels out, then you'll be able to realize that. Obviously, like you said, on the refinances or the flips or stuff like that, obviously margins, you can pay out on those because they're just cash opportunities.
Mm-hmm. Yeah. I think it sounds like you're lean for the amount of stuff you're doing. And that means that you've got A players working for you. You also mentioned early on in the conversation that the folks working for you are growth minded, like they're drivers. They understand they're pushing the business forward. I'm sure that helps a lot. So let's just think about this. Like you mentioned a couple of things that I would not ask for your exact expenses, but for somebody thinking about doing 100 flips a year, what do they need to think about spending on marketing? What do they need to think about spending on overhead? Like, what is that like?
On marketing, I think I'll start there. I would say, just like I said early on, the one thing I focus on is single family homes.
Yeah.
So one thing that I do and my team does really is we focus on the one thing. So we focused on our online branding, our PPC, Google AdWords marketing, and really honed that in. We were spending anywhere from 10 to 15 a month on AdWords I hired, I've been using them for a long time, online manager that manages all our SEO, keywords, yada, yada, yada. I'm a nerd, so I can talk the talk, but I can't put it. We hire other people that are smarter than us that can do the things, but you still have to have a knowledge base to articulate what you're trying to say to them or what you're trying to explain to them. You can't just say, I want this and this without kind of having some more information to them. So I actually honed in our marketing on our PPC, and we have it now to where the SEO is set up that it actually drives our costs down and it shuts itself off on like when we start going into slower months like November and December. So we're on average only spending 4 to 6,000 a month on PPC. And that's bringing us anywhere from 6 to 10 leads probably every 3 days. So that's our PPC. Not all those go through. Obviously, those are just leads. On our mail marketing, we did, I think that one, we used Ballpoint. It was really good. We actually shut that one down because we thought we weren't getting results. And actually, for all you people out there that are like, man, mail marketing is expensive. If you do it right, it works. It is expensive. But I think that yearly cost us around 20 grand. And we're still getting leads. That's why we're planning to start that back up. Bandit signs, cold calling. I think we've only spent over a 2-year span, 27,000. And that is including all leads, software costs, all cold callers.
You have cold callers calling a day.
Yeah.
Yes.
We just have one. So we had anywhere between 4 and 5 calling at once. And obviously through the event we went to, and I was realizing like, man, these aren't the right people in the right seats. They're not making the business move. So we're actually revamping our cold calling. And that's our main focus right now, is to revamp our cold calling platform to make sure that we're actually getting deals and it's making sense. One of our deals from our cold calling channel paid for the entire marketing expense for those 2 years. So to be honest, we bought 2 or 3 more from cold calling that have been positive. So we're very long positive on that channel. And I keep saying this is what I want to reiterate on marketing is make sure it's working. Don't just throw money at the wall and hope it sticks. Like if it's on PPC, you have to do at least 3 months of testing. And after those 3 months, then you dig into SEO and figure out keywords and terms and yada, yada, yada. Hire a manager, make sure someone's smarter than you. If not, go to school, go to YouTube Academy and start learning about that. On my actual overhead, so that's on the marketing. People that are with us, we've created. Perfect. Hold on.
Somebody's happy. One of the things that I can compare with what you're saying is when I was the buyer, right? When I was the acquisitions guy, I was like a lot of referrals, right? A lot of free stuff, social media posting, calling realtors and making lowball offers on everything on the MLS, right? And there is a capacity, a max capacity to how that works, right? There's a max to how much you can do yourself. When you start thinking about scaling a business and doing enough volume to support a team, right? You do have to do some marketing. You need some inbound leads coming in, right? Where you're not having to go out and get them. And I like to tell people you can either pay for leads or you can spend your time tracking them down, but you're going to do one or the other. And it just depends on how you value your time, right?
Yeah.
So
Inbound
when a lot of the same stuff I'm doing.
Yeah, inbound sexy but expensive. Outbound will really test your character and if you want to be in this business.
100%. How hungry are you, right?
Yeah.
So let's talk about your overhead with the team members, right? So I think you were about to tell me how that's structured.
Yeah. So we've structured a few things with the team where people obviously are set up to win within our organization. So we have some profit sharing alongside that. Actual numbers. I'll say as a company whole, we're under 50,000 a month in total overhead. And that's marketing, that's people aligned with us. But we have some competitive advantages and we gave those so people would, as business owners and stuff, yeah, it's great to make a bunch of money and stuff. But like, why don't you want to do that and set your team up for success as well? Like, and I understand we're a lean team. The whole vision of Spark Equity Group is the people that are with us. We want to see everybody at the top. Like, we don't want anybody at the bottom. Like, we just want everybody to win with us. So we've created some competitive payment structures inside that I won't dive into, but as a whole Spark Homes operation, we're on just under, I think, 50,000 a month in overhead.
Yeah. I know you got a bunch of rentals and your rentals are probably cash flowing some of that. Are you paying for that with rental income or are you paying for that with flips, hotels?
Yeah. So mostly it's
separated like that, or do you mostly just, it's a big pot and it's coming out, whatever's there?
Yeah. So like actually the main support's probably cash flow right now as we build. And obviously I think we have to do, I think it's one flip a month of 20,000 profit. And that sustains us or makes the quote unquote comfortability. So it's not a really daunting task to do at least minimum one flip or two flips a month, 20,000 minimum profit. That would help with that overhead cost. So it's mostly cash flow, a few flips or wholesales, hotels that bring in the extra.
You know that you need to do at least one flip a month. It's like your nut that you hit.
Yeah. We just need to do one flip a month that makes 20 grand.
Yeah. And you're doing, shoot, 7 or 8. It's definitely a comfortable place to be.
One thing I think we talked about was, and I do want to restate it, was I don't want people to think that, oh man, I'm going to do a bunch of houses. I just don't want it. You have to make this outweigh this balance of overhead costs, marketing expenses. I just want to make sure people, like, you don't have to do 10 deals or 9 deals or 8 deals before you're in the money each month. So I would look at what that cost is and make sure you're not having to do 8 to 10 deals to support your team. And then your 11th and 12th deal is profit. That's not fun for anybody. You don't want to have so much overhead where you're feeling choked all the time. Yeah. So it's okay to pull stuff away, back stuff down, restructure, figure things out, which we do constantly. Like just right now, we're pulling our cold calling channel down and restructuring and figuring out how it works. So don't ever be afraid to literally stop something, rebuild it, and make it better.
Yeah. So constantly like refining your practice, looking at your numbers and saying, how do I make this work?
Yeah. Because any business in the world is worried about 2 things: drive down overhead, increase profit. One thing that we do in our organization, we ask a couple questions. Can I buy for 1, sell for 2? Can I live with my worst case scenario? And obviously, can I drive down overhead and increase profit?
Yeah. So let's say those questions again, because I'm taking notes here. Let's see. The last one was, can I drive down expenses and increase profit?
Yeah. Can I drive down overhead and increase profit? And then can I buy for 1 and sell for 2?
Okay. Double my money.
And can I live with my worst case scenario?
I love it. That's a good way of thinking about it. We actually have a mutual banker in Prosperity Bank in Tulsa. Yeah. Never met her in person. She's done millions of dollars in deals with us. She's excellent at what she does. And I know that she thinks you're an amazing operator. You've definitely built up a great relationship there.
Yeah. So cool story is Maisha and Matt Wilkinson. So she was like Matt Wilkinson's protege. over at Prosperity, or is it Prosperity?
Yeah, prosperity.
Yeah, Prosperity. And we use a lot of lending partners. So if we had one bank that would do all our volume, please get me in touch with them. But no, she was actually the very first banker I ever spoke to. And let me tell you, like, we went to coffee and I was the most nervous person, I think, in the room. And she was just so nice, humble. She's like, it's okay. Like, we're learning. And she taught me a ton. So yeah, Maisha is amazing. We have a ton of loans with her. She's an amazing operator. I think she's executive now. Like, she's built herself up. So Maisha, she's amazing.
It's good to have good lending partners and be able to reference check your new friends with your bankers. So that's all pretty cool. This is great, man. You took a lot of time this morning to talk us through cash flow management, your own story, your own business, your team. Where are you going from here? What's next? What direction are you heading?
So like I said, and I keep reiterating one thing, I don't really plan to steer my course away from this for a while. I would love to see this business become sustainable without me. And I haven't got it to that point. Until I get it to that point, I feel comfortable where the famous quote, 4-hour work week kind of thing. When it gets to that point, I think then it'll free up that thinker's mindset. And I'll be able to do a little bit more planning and what's next. I think for me, I'm pretty happy where I'm at. I enjoy what I do. Single family, it's fun. It's bread and butter. Now don't get me wrong. Like, we mix some other stuff in there, land and stuff. If I were to plan what my next thing were to be, it'd probably be land. I just really enjoy land. I'm a big hunter. I've worked cattle, horses. Excuse me, I've worked cattle. I've worked cattle one time. I know if someone watches this, they're going to pull that out and make fun of me. But worked horses for a while. And then I just really enjoy land. So if I were to go somewhere in the next 5 years, I may put more attention towards land. But I would probably say my next focus would also, like I said, if I could get to that quote unquote 4-hour work week, I would love to copy my business and put it into another state. That would probably be my next main objective, to bring my single family business into another state where I could depend on other people and I'm not there presently. So that would be probably the next big move.
I know you're not that far from us in Dallas, so we need to keep that conversation going. But I find myself doing deals wherever they are. So we're doing some stuff in Oklahoma. And of course, we love Texas. Mississippi's my bread and butter. So we still do deals there as well. But love to do some more deals with you.
How do you make that move into another state? I'm curious.
Yeah, so physically, I relocated. So that helped. I was teaching at Ole Miss in Mississippi while I grew the rental portfolio there. That's where my property management company is. So I feel very confident about my team there. And my wife decided she wanted to raise kids in a larger city, more opportunities, better education, all that kind of stuff. And so we made the physical move. The good thing that happened when we made the physical move is that I had to start putting systems in place for, okay, what if I'm not there, right? There has to be some other people in charge of this and that. The challenge is that things don't always operate the same when you're not there. And the market is totally different. Mississippi's pace and market is totally different. So there's a much higher will and deal type atmosphere in Dallas, as you can imagine, a lot more competitive, a lot more access to things. So there's pros and cons. But the biggest thing is like finding out what works best in the market that you're moving into. So I've noticed in Dallas, flips work better, lease options work better, rent to own works better. You just got to watch Texas law with that because you can only do so many a year.
3, right?
Yeah, they've changed it a few times, like 1, 3, 5. But you have to be careful with how you do it and how you structure it based on the state. Mississippi doesn't have any rule around it. Yeah. So just getting to know the market, like knowing Dallas is where we're have appreciation. You're going to pay like crazy property taxes if you're trying to hold stuff. So you better buy in a good location. Mississippi is more cash flow, right? You're going to be able to buy it, rent it for good money and cash for a long time. So just figuring that out has been a process. But if we find a deal that's outside of like our, probably like your reach, our reach type situation, we're definitely trying to monetize those by wholesaling or JVing with somebody and just flipping those.
Nice.
Yeah, for sure. This is good, man. I'm looking at the questions I had planned to ask you, and I think we bounced all over the place, but I definitely think there's value to folks that are looking to scale up their portfolio, scale up a business. I met Justin at a meetup for other investors that were looking to close more deals, right? I get that question a lot. Like, how do you meet people that are actively doing business, that are growing and they have a growth mindset? Go to some of these events.
Yeah.
Pay to be in the room. This wasn't even an expensive one. It was just
It was like $197 or something.
I know. It was like when he put the price on it, I was like, duh.
Yeah. I think it was like
my flight and my hotel were more expensive than the event. So,
yeah, that's what I was saying is like the flight and the hotel are more expensive than, but I think one thing people forget is, like you said, is when you meet people, it's just going to open up a door like, oh, I didn't think that way. Or, oh, I could structure the deal that way. Or like when I met another person there, they were talking about novations, and he opened up a couple key doors for me of how I could open up another disposition strategy where a lease option or a rental or a flip or blah, blah, blah didn't work. I agree. You need to get out. You need to meet people. I actually need to do it a lot more. I tend to be a little hermit sometimes. So I agree with you.
I know what I get is I meet people, but I can borrow belief from how they're doing something, right? So lately I've been attending events where I'm meeting people who've built teams as a way to manage everything instead of trying to do everything like a solo entrepreneur. So you're another person that I'm meeting that has a team operating at a high level where you have somebody in charge of acquisitions, you have people helping you with dispositions. So you're going to have buying and selling happening and you're overseeing everything, helping everybody win. That's more of what I want to see in my business. And everybody has to decide that for themselves for sure. What's one thing, maybe a parting piece of wisdom that you would give out to somebody who's listening? Most of our listeners actually, most people that see this podcast watch it on YouTube. So if they're watching this, they probably are scaling a portfolio or they've done a few properties. Maybe they're in their first one. What's a parting piece of wisdom you'd give them?
So to touch base on that last thing is, after listening to this, if you gain any value, take action. You're not going to do anything if you read 100 books. You're not going to do anything if you listen to 100 podcasts. The only difference between Justin and Don is we've just taken action. We've taken imperfect action. So if I don't leave anybody with anything, is take imperfect action. You're not going to get everything right the first time. I've made many mistakes. We have probably made many mistakes, and we learn from them. Whether it's we learn from making a dollar mistake or making a marketing mistake, making an underwriting mistake. If you just learn from it, and just keep moving forward. So my parting is take imperfect action and just go for it. That's probably as simple as it can be. So if you read a book, understand that book and pull out of it what you can implement today.
I think that is amazing advice. I would advise people to do the same thing. Take massive action. You got something, whether it was like your marketing idea or a team member you need to hire or just the way you need to account for your money. He talked about tracking his expenses at the end of every month, dialing that in. There's so much value that came from the day. If you jumped into this at the end, go back, listen to it. Justin, this may have been your first podcast, but you're a pro. Thank you for doing this. Thank you for the value. Those of you that want to reach out to me, I still answer every single email that you sent to grabthemap@gmail.com. So send an email there, or you can find us at grabthemap.com or anywhere at Grab the Map. If you're listening to this somewhere on the podcast channel, we're also on YouTube. That place seems to be kicking. Please comment there or submit a review. Every time you submit a review, it helps more people find the podcast. So submit a review. Hey, Justin, thank you so much for doing this. How can people reach you if they're trying to reach you after this?
Yeah, I think probably the best way is probably Facebook, Justin Oldham, my name. Then I think I just reopened my Instagram account. I don't even know the name of it. It's Justin Oldham _. So you can reach out to me both those ways, but probably Facebook is the most simple way.
Awesome. And we'll put that in the comments. All right. Very good. Justin, thanks again. Thanks everybody for listening today. Don't just look at it, grab the map. We'll talk to y'all later.